Welcome to the latest episode of Unbind with Bindable. I am Jean Marie Lovett, president of Bindable, and I'm joined today by Austin Heron, our agency general manager. One of the areas that I focus on a lot at Bindable is the performance of our agency. I've been with the agency since inception, and I've developed deep relationships with many of our carrier partners. And I think we can all acknowledge the last couple of years have been unprecedented in the P&C industry especially, and it's been really fascinating to watch the response by both the carriers and the intermediaries. But before we dig into that, I want to give Austin a chance to introduce himself. Austin?
Hi, thanks for having me. I'm Austin Heron, and as Jay mentioned, I'm the general manager of Bindable's agency, where I'm responsible for managing our sales and service teams. Prior to Bindable, I worked at Liberty Mutual, so I've seen both the carrier perspective and the independent agencies like ours. Happy to be here today to talk with you on this subject.
Great. Thanks, Austin. I think we can start by restating, it's clear we've been experiencing a very challenging market these last couple of years. A lot of the focus has been on how our insurance company providers have had to take action in order to remain profitable and focus on that profitability. While much of the focus has really been on how they're responding, right? They're cutting back their marketing budgets, they're tightening their underwriting criteria, they're suspending certain geographical areas, even pulling out of certain states entirely. But while the focus has been on that, we really haven't focused on where the opportunity lies, right? We think providers are missing out on an opportunity to grow their business in different ways. And, that's really what we're here to talk to you about today. We want to empower leaders to think about alternative means of distribution as a way to gain a competitive edge in the industry. Austin, you work really closely with our carrier partners day in and day out. What tactics have you seen them using these last few years in this challenging market?
Yeah, great question. Honestly, we've seen carriers try everything to help reduce their loss ratios in unprofitable areas and demographics. Many of them have had to restrict certain states or areas within states to a very limited subset of business. Um, as you know, whether that's bundles only, high liability limits, low mileage, high mileage. Um, we've seen a pullback in marketing spend, additional underwriting filters, and even a complete pause on new business in a majority of states for some carriers. Of course, we know that this was and is necessary for carriers to reduce loss ratios and get back to profitability, and we're starting to see some of that, come to fruition now.
Yeah, no, absolutely. It's interesting though, despite all of this, we actually have seen growth within our own agency, right? So I'd like to talk a little bit about some of the things that we've done despite all the barriers to continue to grow. And, the reason is we know markets are cyclical, right? And we're starting to see the current market soften a little bit. I think it'll help our listeners to understand some of the things that we've done so that when the markets start to open up again, they're ready. We all need to be proactive in our efforts to sustain that profitability.
Yeah, absolutely. Within our own agency, as you called out, and with our partners, we've had to be very diligent about placing the right risk with the right carriers, as is always important. But we're very fortunate to have a great many markets to represent with lots of carrier options. One benefit we do have to ourselves and our platform partners is the ability to pre-filter the quotes that we send to carriers on a very granular level to kind of match the appetite for the risk and the geography by product line. This has allowed us to weather the storm and navigate this market and actually continue to be in growth mode, as you called out, which has been great for our agents, keeping them encouraged when their job is harder than ever.
Yeah, absolutely. Right. I know, we're really proud of our agents. They've got to be that trusted advisor and abate those concerns that our customers have when they're seeing, the prices continue to rise, right? And they've done a fantastic job of explaining the market conditions by also, really making sure that they have the right coverage in place. So it's really, really something to be proud of. Let's move on to talk a little bit more about some of the alternative tactics organizations can use to continue to grow during hard markets and even beyond hard markets, right? I mean, we know that insurers have effectively navigated both the direct and the agent channels. The next challenge really lies in how do they utilize alternative avenues to drive that profitable growth. So, there might be a case where they can't grow their core business, right? It doesn't mean that they can't still be the destination for their customers. And the way to do that is to provide alternative solutions and products, even if they're not their own. Austin, why does this matter, right? What are the benefits for some of our carriers?
Question. Utilizing alternative distribution channels, it's going to allow carriers to grow, in ways beyond their core products. Good market, bad market. Some of the benefits of this include cost-effective customer acquisition as they're monetizing their existing customers, right?
Yeah.
And increased retention and customer loyalty. So offering digital bind online solutions, especially these ancillary products that have been performing profitably still in a hard market, it's going to allow carriers to bring balance, right, to their risk portfolio. A great example of this was the recent pet boom, right, during the pandemic. Many capitalized on that by offering pet products as an option to the customer base. Additionally, there's this freedom to be able to test and learn with different products, especially if they're another carrier's products, right?
Yeah, no, absolutely. And, I think, as I said, we're starting to see signs that the market is letting up, right? It was Swiss Re's Sigma report came out a couple of weeks ago saying that the global non-life insurance markets are going to start to soften, especially going into 2025. And I think that's why it's important to have this conversation today so that the, companies are thinking about how to engage with their customers so that when the market does open up, they don't need to re-engage. They've already got that relationship with their customers. So, this isn't new though, right, Austin? I mean, we've talked about this. You could turn on the TV any day and see a Geico commercial, and they're offering a lot of products that they themselves don't manufacture. You're going to see them selling, RV, pet, jewelry insurance coverage. They're going to offer their own core products as well as others that they don't. And they work with providers in order to do this because it helps them really focus on remaining profitable outside of their core business, right? It helps them balance that risk portfolio. And as a result, not only are they keeping their customers loyal and growing their business with their customers, but they're keeping them within the ecosystem. They're not going somewhere else to buy those insurance products.
Exactly right. To be honest, it's not a bad situation for those other product providers as well. Right? They're gaining market share under Geico's brand. This is something we see with our own clients as well. Geico's always done this as well, not just in a hard market. So that's probably the other lesson here: is to be proactive about these things instead of reactive.
Right, exactly. And you mentioned our own partners. We see this with one of our partners, Century Dairyland. I know you work closely with them. What approach are they taking?
Yeah, Dairyland, for those who don't know, is a Midwest-based provider of primarily motorcycle and auto insurance. From a direct-to-consumer perspective, they wanted to offer products that they didn't have, which allows them to service their clients' needs where they can't with their core offerings. So, an example, right? A loyal Dairyland customer has motorcycle and auto insurance. This customer is in the market for pet insurance. To use your previous example, they may go to another carrier like a Geico, right? And they can get that pet insurance quote, but they know inevitably that carrier is also going to cross sell them or cross quote them those additional lines, that auto and that motorcycle and that home. So this allows Dairyland to kind of fill that void, right? To solve for this, they partner with Bindable to offer a digital experience, including those products such as renters, life, pet, RV, to the direct customers, with not only the goal of improving customer acquisition, but loyalty, retention as well. I guess it's important to call out as well, right? Dairyland, they were no outlier to the profitability concerns in this hard market, and thus they were able to continue to focus on growth here outside of their core lines of business.
No, exactly. But for a carrier like Dairyland, I know they primarily market through independent agents. What were they able to do to help the agent experience during this market?
Yeah, great call out. Dairyland does primarily work through independent agents, so while providing direct solutions to customers is great, it doesn't do a lot for the independent agents who are really right a majority of their business. So using that same technology as with their direct customers, Dairyland was able to offer independent agents the same digital tools on a smaller level to bring those products to their customers. Right? They're able to offer those IAs their own version of the tools to offer renters, RV, pet, bringing the same retention and efficiency benefits that they were gaining on the direct side of the business.
Right, that's great. Yeah, and I know, while the products are primarily sold online, occasionally customers do need to call in and, Dairyland and some other carriers and agencies may not want to have their producers have to learn all the nuances of all the individual products. And we were able to solve that using agency services, correct?
Yeah, exactly right. In this case, Bindable is able to provide the limited agency services required of these products on a white label basis. and top dairyland producers are able to focus on what they do best, right? Writing new business, and they don't have to worry about the customer experience and processes that go with that.
True, true. Yeah. And, I think as the market softens, one thing we need to acknowledge is that things just aren't going to stay the same, right? And it's, some of the things that got us here in the first place aren't going anywhere. Distracted driving, you've got increased litigation, got these cat storms, the non-cat storms that are beating up the middle of the country, and the cat storms down, down south, and wildfires in California. So these things aren't changing, right? So how are the carriers going to adjust? They can't just keep increasing their rates to deal with the profitability concerns, right? So what are some of the other things they need to think about to focus on getting to those profitable customers?
Yeah, no, we have a partner, as you mentioned, a large national insurance carrier with 19 odd million individual insurance policies across all 50 states. Really, they have always kind of focused on membership groups and affinity groups, organizations like that, as we know, typically can be a higher converting and more profitable subset of customers. So in times like these, it's even more critical to be able to offer these programs and manage the programs efficiently. This particular partner manages over 2,000 unique programs. So managing each program's unique branding and scripting and tracking and curated product mix can be very difficult at scale. This is part of the reason they partner with Bindable, to use our platform to do exactly that, right? So being able to manage over those 2,000 programs has always been a competitive advantage of theirs, but as you called out, especially true in today's market conditions, right?
Right, exactly. I know we've been working with this partner for a number of years. Was there anything in particular that they did recently to address this hard market?
Yeah, in addition, obviously, to the access to the preferred customers through these experiences, they wanted to offer additional products similar, to the previous examples. We built out an integration for their pet product into the platform, as well as enabling carrier choice, right, for many of their programs to diversify their offerings to their customers beyond their own products. So this is better in the end for the customer to have more options, but also more appealing to some of those membership organizations to say, where we don't have a product, we're able to offer other carriers products as well, knowing that the end consumer is going to be better off for it.
Yeah, that's interesting, Austin. In our last episode of Unbind, our co-founder and CEO, Bill Sunnison, he had a great conversation. I don't know if you remember, with Ellen Carney of Forrester. And Ellen, really focused on trust and the customer experience. And I want to find this exact quote. She stated that for consumers who have high trust in their brand, 77% of them would trust most other companies that are affiliated with that firm. So it seems like there's a natural opportunity to really offer other products if you've already built that relationship with your customers. Would you agree?
Absolutely. Right. Now, once again, the theme here is building on the trust that's already established with your customers to diversify revenue streams, expand product offerings to customers outside of your own products. It's better for business, obviously, and it's better for the customers at the end of the day.
Yes, yeah. And I know we also, we've talked a lot about our carrier partners and carriers in the industry, but we also work with intermediaries like life and health brokers, life insurance providers, as well as financial advisory firms. And we work with them to improve their offerings by adding P&C products. Why does this also work?
Question is, in my opinion, and what we see is it's because these organizations have already spent the time and they've spent the money and the effort to acquire these customers who trust them because they're providing them with great service. So why not build off of these relationships and create further stickiness by offering relevant products that your customers need? Good example would be, a large financial services company wanted to go beyond their core offerings to more holistically meet the needs of their customers. So they've already had some internal agents to sell insurance, but they really wanted to expand their business, right? They wanted to enhance their customer experiences by distributing P&C through these financial advisors and via digital experiences. So by leveraging Bindable's agency operations solution, this group was able to drive customer requests for P&C to their own agents, keeping them in their own ecosystem. And so these agents are now able to seamlessly offer a national auto and home choice program, as well as having a digital solution that's unique to them and their brand.
Right. Yeah, that's great. So they're able to focus on their own offerings without, they're able to expand their offerings while focusing on their core, right? Exactly. I see what you're saying. What are some of the other trends that you're seeing within these intermediaries?
Yeah, some of them are, they're investing or they're now able to invest more in embedded solutions and affinity partnerships with the help of Bindable, while some other adjacencies, focused on adding product lines to cross-sell their existing customer base. More specifically, we have many large banking partners who will build in a customer journey that includes our digital products to service their mortgage customers with home insurance, home warranty products. That's going to improve obviously the closing process efficiency, but it's also adding value to the customers at the end of the day and taking more work off of their plates.
Yeah, no, that's perfect. Thanks, Austin. I mean, I think these are great examples from across the ecosystem, and I've taken away a few key points that I think are important to reiterate, right? So, if you're going to navigate the world of alternative distribution, one of the key things is make the strategic decisions, right? So don't pause, don't punt, don't kick the can down the road. It might make you uncomfortable, but you have to make that strategic decision to move into alternative distribution. And, kind of to that end, you've got to be proactive about it, right? You can't just sit back. You need to test and learn. You're not going to have the perfect solution right away. You've got to realize that it's okay to fail and try again because, depending upon the organization, new initiatives can take a lot of time to realize their full potential.
To that point, right? Don't do it alone, right? Choose good partners who know what they're doing in the space. It'll be less wasteful, less painful in the long run, and you're more likely to execute and actually be able to go to market with some of these products.
Yeah, and I know, Austin, one of the things that you've done really well is keeping the agents in mind. That customer and agent experience are really symbiotic. And, the agents need to be involved as co-creators of the change, right? If you equip the agents with those tools and processes to make their jobs easier, it's going to be a better customer experience as well.
Yeah, who's going to know better what's going on with your customers than the front line, right? Those agents, I know they really appreciate being involved in the decision making for sure.
Yeah, absolutely. Well, Austin, it's been great talking with you on this subject, and I hope it was valuable to our listeners as well. And we will talk again soon. Thank you.
Thanks, Jean Marie. Always a pleasure.